Hello friends, welcome to this November update on international investments. Globally, we are seeing that equity markets have climbed a wall of worry and are at record highs. In the US, the markets like S&P 500 and Nasdaq are at all-time highs, even as inflation has been on a rising trend and bond yields have risen to 1.5%. However, we are seeing that there are signs of supply constraints passing their worst point, the surge in the commodity prices reducing, and wages also coming under control. Overall, inflation, which is a major worry for equity markets, is expected to peak out by early 2022 and then moderate by mid-2022. Fed has started its tapering, but the first rate hikes are not expected till next year. The positive news is that in the US, the earnings growth has been very strong, with S&P 500 earnings for the third quarter coming in at 38% compared to expectations of 30%. Corporate margins in the US have also risen to record levels, and the third quarter margins were 70 bips above expectations. No wonder the S&P 500 and Nasdaq are rallying to all-time highs. Now, at Birla Mutual Fund, we provide two fund of funds and one equity fund, which invests or which gives investors an opportunity to access themes that are not available in India. The first fund of fund is the ABSL Global Emerging Opportunities Fund. It gives access to 5 themes such as digital disruption, energy transition, shifting lifestyles, feeding the world, and arising Asia, across subsegments like cloud computing, blockchain, cryptocurrencies, AI machine learning, genomics, digital health, digital education, plant-based meats, water, the rising middle class, electric vehicles, and so on. You can see that these themes are not available in India. Now, if you see the sectoral allocation, 2/3 of the allocation is to the digital disruption and the shifting lifestyles themes. The top 10 holdings of this fund are well-known names like Microsoft, Google, Amazon, Thermo Fisher Scientific, Abbott Labs, and Facebook. From a geographical allocation point of view, 2/3 of the allocation is to the United States and the rest to US and Asia. This fund has been very consistent in its performance. For the past 1 year, it has given a 37% return in US dollar terms, and the 3-year CAGR is also about 20% in US dollar terms. The second fund of fund is the ABSL Global Excellence Equity Fund. This invests in global market leaders with well-known brands and proven business models. If we see the sectoral allocation, about 1/3 is to the IT sector, about 18% is to healthcare, 11% is to financials, 8% to industrials, and the rest to other sectors. The top 10 holdings feature names like Microsoft, Google, Nvidia, Apple, United Health, Salesforce, and so on. We can see that these are industry leaders with names like Hermes, Nike, Home Depot, defensive quality companies like Johnson & Johnson and Roche, businesses with high barriers to entry like Intuitive Surgical and S&P Global, and companies that have platforms and networks such as Amazon, Microsoft, Google, and so on. No wonder that this fund has given very consistent performance. Over the past 1 year, the fund has given a return of 37% in US dollar terms, and the 3-year CAGR is about 19%. The third fund is the ABSL International Equity Fund Plan A, which invests directly in international stocks. If you look at the geographic allocation, about 2/3 allocation is to the US and the rest is to countries in Eurozone and Asia. The top 10 holdings are a bit diversified with names such as Microsoft, Facebook, Google, Julius Baer, Royal Bank of Canada, Wells Fargo, Medtronic, Emerson, which are across sectors like tech, financials, industrials, pharma, and healthcare, and so on. The diversification has helped this fund, and over the past 1 year, this fund has given a return of about 30%. Over the past 3 years, it has given a CAGR of about 15%, and the 5-year CAGR is also about 16%. I hope this gave you a good update on international investments and the options we provide for investors. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.